Welcome to Stock Markets with KR. I hope you are having a nice weekend. We have Anosh here back again. And by the way, if you're watching the video, then great. Make sure you like, share, subscribe, do all of that. It's really good. And if you're hearing this episode on the podcast, then consider checking out the video as well. It's on my YouTube channel. Stock Markets with KR is the name. And it's got obviously a ton more stuff, including additional resources, which are there in the description. So with that, Anosh, uh, let's say hi to the lovely audience that we have.
Hey guys, it's KR's channel. Let's dive right into the charts and look at Nifty 50 on the day. We can see that Nifty had a sideways week for the most part, but then on Friday we saw this down move, which was quickly covered after it retested that 1.618 around 15,450. We can take a closer look here and see how long that wick really was, and it was a real killer for intraday players. That massive down move followed by such a massive up move, that volatility is often too much to handle, and I'm sure a lot of people got whipped around in that. Bank Nifty, our level of 34,000. We had mentioned last time that banks seem to be losing momentum, and they have for most part. Friday again, they tested that 34,000 level before bouncing very sharply at around 34,558. However, on the relative strength chart, they continue to weak and are completing that sort of head and shoulders pattern that we see here. About mid caps, small caps, and large caps, and the Nifty 500 market indices. We can see that all of them have had a down week, and Nifty has taken resistance at its previous all-time high that was made in Jan 2018. Here's a look at their relative strength charts versus the Nifty. So we can see that they faced a little weakness as compared to the Nifty in this week. This is 8 performance. We can see that all these broad market indices are sort of, they've made short-term, mid-term top kind of dipping lower. And this time, clearly we can see that the dips in the broad market indices are lower than the dip in Nifty. We look at their weekly performance, and has outperformed all three. Mid caps faring the worst, down 1.5% almost, and small caps have done minus 0.6, and Nifty 500 almost flat. So probably we're going to see a little bit of weakening of these broad market indices. Outperforms for a brief bit of time. That being said, these chart breakouts are pretty much intact. Continue to, in the medium to slightly longer term at least, we remain more on the broad market than on Nifty itself. We can look at NIX and the USD INR currency pair. We had spoken about how this were an important level to watch for these in case of a breakdown or in case of a bounce up. Actually thought that these might form head and shoulder pattern breakdown candidates, but that has now been, as these currency pair and this index has broken out of that parallel channel from the initial. India VIX, which is our volatility measure, remains at wills. It lies right now in the region between -1 and 0 standard deviation term regression channels, which means we're in almost the lowest part of territory seen on the India VIX. I think KR can now show us some Nifty heavyweight, starting with RIL.
Thanks, Anosh. Thanks for the quick and nice broad market analysis. Just a quick little thing. If you could just summarize what you feel about the broad market, I think that would be great, because there were a little intermittent issues in the, audio. So especially for the podcast listeners, I think it would help a lot if we had, that little summary. So if you could just do that.
Sure. Basically, ever since the Nifty top in about mid-Feb, we saw that indices were very resilient to the volatility that was otherwise seen in Nifty. And all these have pretty much outperformed throughout that period. So their relative strength charts are all looking upward in that time period. However, now what we're witnessing is probably the start of a little bit performance by these broad market indices, as Nifty for once outperformed these three indices on a weekly basis. Also, this is natural because, as we can chart here, the broad market indices have had one of the most stellar runs and almost unblemished in all of them. Small caps are at their 2018 all-time high resistance, so no is immediate cause for concern or panic alarm just yet. It may be a brief hiatus of funds that they're facing, and post which we can probably continue and resume the rally up.
Great. Thanks for that, man. Now we'll jump into Reliance and the top five stocks. And starting with Reliance, so last week we spoke about Reliance. It was at the 2192 level, the fib extension, and it still continues to be there. But now it has actually retested the one fib extension level. So at 2278, essentially, Reliance had a really nice run at the start of this week, but then obviously towards the end of it, it sort of started losing a little steam. That said, Friday's candle is looking pretty good. It appears to me that as of now 2200 2220 has been accepted, which is a great sign, I feel. And I think if these levels are held, especially RSI is also held, I think we could see some good movements with Reliance potentially even breaching that 20 to 80 resistance. So I think that is where our eyes should be at. Coming to the next stock, which is HDFC Bank, and we can see it's at the 50 DMA. It's at the 50 daily moving average, which is a pretty important level typically, because it is where we've seen a lot of the supports or resistances being taken in the past. And what we can see here is that it's right in line with the 1460 support zone, and that is looking positive. So I think as long as this is maintained and sustained, RSI is also above 50, which is a bullish bias. I think as long as this level is sustained, there is a good potential that we can test that 1500 plus level in the near term. Coming to Infosys, now Infosys, obviously we can see it's made a fresh all-time high. It's above 1500, which is obviously really nice for the stock. The thing with Infosys is that typically, and again, this is something that we've also spoken about in the previous editions of Market Chronicles back when they were just text-based. Infosys has this habit of forming evening star patterns and spinning tops and all sorts of things at its high. And if we go by that, then I think this could be somewhat of a warning sign. Again, the trend is obviously bullish. You don't need a very very crazy technical analysis to understand that it's going up. But from what I have seen, Infosys typically sort of loses steam a little after making a high, especially when we see candlestick patterns like these. So I would personally keep a close look at Infosys, and then let's see what happens. 1500 levels have been held, which is obviously a great. Coming to the next stock, which is HDFC, we can see it's come down quite a lot since we last spoke about it, and it's actually breached 2500. It even breached 2480 actually, but on Friday it was able to sustain above that level. So I think as long as 2480 is held, things should be okay with HDFC. Obviously, if it's breached, then we have that green outline around 2365, which is where it might be a really good pick. What we can see here is that the candlestick pattern on Friday is really good. We can see good support at lower levels, which is, I think, positive. Now coming to ICICI Bank, what we can see is that 633 level, 633 level is technically held. If you consider the closing basis, we can see it's 630.LTP, but that horizontal line has been breached. So quite frankly, it appears that ICICI did have a little bit of a breakdown on Friday, but the good sign is that we can see there's been sufficient buying happening at lower levels on Friday especially. So I think as long as it's able to sustain above Friday's high on Monday or in the coming week or so, I think it should be fine. We could potentially reattempt that 665 level. And now coming to Kotak Bank, and we can see Kotak Bank is actually one of the very few banking stocks which is at its 200 MA. It is not above, not below. It is at the 200 MA, which is very cool to see. We can also see it's somewhat of a trend line support, and it's also got that fib level right here. So I think Kotak Bank, obviously our stock was hit. We spoke about it in the previous couple of episodes. previous couple of videos, our stop in Kotak Bank was hit technically, but right now it also looks like an interesting, stock to keep our eyes on. 200 MA fib trend line support all looks good. Friday's candle is nice, so I think this could potentially be a good time for Kotak Bank to unleash its true bullishness, especially because all the weak hands have been shaken out. And now coming to SBI, we can see very strong down move on Friday. Very big candle for SBI. And what we can see here is that 420 was not respected and 400 appears to have been the low. I think 402 was the low we can see here, which means that gap has been held for now. But then it really depends if Monday we can see some bullishness happening. This strong red candle is really not very reassuring. So I personally keep an eye out for this one. So let's see how it goes. And next, coming to Axis Bank. Axis Bank still continues to be in that range. It's still in that 4.5% range, which is honestly insane. I think we don't really see these larger stocks being this consolidated, especially when the other stocks are either going up or they're going down. But Axis Bank is one of them, and it's just consolidating quite intensely, still within that 4.5% range. So it's very difficult to give a certain view on it. But there is a chance that we could see a big movement. Obviously, the longer it consolidates, the more potential it has to really show us some good big move. So let's see what happens. Again, Friday's candle looks nice and bullish.
Wonderful, KR. Thank you so much for running us through the Nifty heavyweights. I think it's given us a few interesting pullback setups, since that's the theme that everyone's catching on to now because of the down move we saw on Friday. A lot of strong uptrends have witnessed some pullbacks, and two very interesting picks that we'd like to share with the viewers. First one being Siemens India. See a lovely uptrend and a subsequent pullback to this level, which was held very well. I think this candle is also pretty reassuring. This is all the bullish confirmation we need. This candle's high seems like an excellent long candidate to me, at least. We then move on to Kaveri Seed Company, that's KSCL, on the weekly chart. So we see another very wonderful breakout and subsequent pull. We're looking at about $1,000 on this chart if things play out in that direction, with a limited downside risk below this level. So I think this makes for an excellent also. Lastly, we have one of the largest PSUs, that is ONGC. He has completed a pullback, but that Friday candle is not very reassuring. It's a candle with volumes way above the average. So I think we could wait bullish confirmation on this one before making a move in any direction on ONGC. And that's about it for the trades.
Thanks for those interesting trade setups, Anosh. One setup caught my eye, that Siemens. I think it did a 2000 retest also, and it caught my eye because I am very biased. I have holdings in that stock, just disclosing it. So it looks good. Hopefully, it'll go up. Fingers crossed. And by the way, this has been a great session. Obviously, it was in collaboration with the Financial Pandora. Link is in the description. Check the Financial Pandora out. Great articles on finance, business, and just a host of really good relevant stuff. Anyway, Anosh, any closing remarks?
Yeah, Krunal, thanks a lot for this great session as always. I hope we're adding a lot of value to our lovely viewers. So yes, can't wait to see you again next. That would be all from me. So bye bye, adios.
Adios, amigos, and happy trading.